Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Inflation in currencies in India, Brazil and other emerging markets are likely to have made an impact on the P&L of UPL, United Phosphorus, given its exposure to various geographies. To talk about that and more, Rajju Shroff, the Chairman and Managing Director of UPL, joins us now, as well as to give us the outlook for FY19. Mr. Shroff, thanks for joining us on CNBC-TV 18, and once again, congratulations for winning the award yesterday at the Forbes India Tycoons of Tomorrow. First, I just wanted to start by asking you about the overall vision that you have for the company over the next couple of years. What kind of growth do you see in terms of revenues? How is the demand situation panning out? And how do you see the operational environment for a company like UPL?
You see, I will tell you that UPL has been very different from other companies. How we started as a small scale, but whatever product we made, it was made for the first time in India. We did backward integration, forward integration, and today, especially in agrochemicals, we are the 5th largest in the world. Why we are there? Whatever we do, we believe that in India we have the best talent available. All we have to do is use our scientists, our engineers are equal to best in the world.
Sure.
And we have been utilizing this talent, and that's why whenever we go abroad, whenever we acquire company, we have successfully turned it around and made it more profitable. So future of our company is very bright, not only in the world but in India. Today people do not know India is 2nd largest producer of food in the world. Our last year turnover, according to World Bank, was 401 billion. That is our agriculture production. But the input industry has unlimited scope, except unless we remove hurdles. Future for agrochemicals,
sure,
which we are in.
You mentioned that, you've managed to turn around a lot of acquisitions. You recently acquired a company called Arista as well. Are you looking for any more acquisitions over the next, say, 12 to 18 months? And what would be the amount, or what is the war chest that you have, kept aside for these acquisitions?
You see, our company, we are all over world, from Vietnam, Australia, to USA, to Europe, to Latin America. And we have a big team who go study which are the company which are in trouble and which are the company with a good advantage with us. So we study that, we see their weak point, their plus point, and then we acquire. But there is no list, we don't declare. But we always look into companies which are suitable and good.
Okay. What are the synergies with Arista?
We will be acquiring few companies, but we do not know whether it will be 6 months or 2 years.
Okay, okay. But what is the war chest? What is the amount you have set aside?
Well, there is no special amount.
Okay.
I mean, look, we acquired Arista, which was more than 4 billion.
Yes.
And we acquired small company with maybe few thousand crores or something.
Okay.
So it depends on company size and advantage.
How and when do you expect this synergies with Arista to come to UPL? Should we start seeing an improvement in revenues this year itself, or is this going to take a little while?
No, well, we have studied Arista very well, thoroughly. Our team knows, and we have a very big advantage because Arista has a big market and reasonable profit. But they were buying material and selling, whereas we have a very strong manufacturing base in India, and we have factories all over the world. So that a big advantage will give us a good thing. We hope in couple of years from number 5th, we can come to number 4th in the world.
Okay,
because
so number 5th to number 4. All right.
Things look very good.
Sure. How do you think the rupee depreciation will impact your own company?
Yeah. Well, we do a proper hedging, so we do not have much problem at all. And all our product, we have a good margin. Actually, with lower rupee, when we export, our earning in India may be little better. And cost of production in India is always very competitive.
Okay.
The biggest advantage our company UPL has is we make superior quality and at a worst competitive price.
Okay.
That's why whenever we go into the world market, our competitor, whether they are Germans or American, most of them close down their plant.
Okay, all right.
Like DuPont, one of the most top company in the world in chemical, we purchased their plant and we have multiplied it 4 times in making more profit. So this is the advantage we have over others.
Yeah, not for nothing did Forbes give you that Family Business Icon award yesterday, Mr. Shroff. Just a final question to you. You have been consistently buying shares from the open market. I have got, at least in the last 1 month, about 10 instances or 8 instances of promoter entities buying about 1 lakh shares from the market. Of course, the law allows you creeping acquisition of 5% every year. You intend to use that?
Well, our finance department does proper planning, proper thinking.
Okay.
And we have to keep our control of the company. So we do a fair work with abiding by all the laws.
Okay.
Okay.
People do come and ask me for tips, but which I said, which is impossible for managing company to judge.
Okay, Mr.
Only
Shroff,
we can say that we are doing very well and future is very bright for us.
Okay, Mr. Shroff, thanks a lot for joining us today.
And many congratulations, sir, for your award. Okay.
Okay, that's
Thank you.
That's UPL. Let's now move on and address the market technicals once again. Ashwini Gujral, Mitesh Thakkar back with us. Sandeep Bagle is also joining us. Ashwini, thoughts on the market after opening with a gap? There's a bit of a dip. Are you buying this dip or is this a market where you want to short? And what about individual stocks?
The issue is that you need a bigger dip to buy because a lot of large stocks are also coming off. So my sense is that follow-through buying after all the rally that we've seen is not so strong that today itself you'll start to see higher levels. So for the moment, still with the high of the day as a stop, I think it's still reasonable to get short. Again, you know, 11,030 to about 11,050. Maybe you need to give up some on the financials also to reach, you know, 25, 200, 250. Because, you know, incremental buying will only come once there is any sort of positive news. Yes, yesterday's, you know, all the statement, etc. is over. But unless there is further development, I don't think people are willing to put money above, say, 150 thereabouts. For the moment, I think housing finance still looks, you know, shaky. So DHFL is a sell with a stop of 612, target of 590. Canfin Home is a sell with a stop of 252, target of 238. And BEL is a buy with a stop of 79, target of 86.
Okay, in fact, Ashwini, you know, you have BEL as one of your calls. I wanted your thoughts on this because it's beaten down to almost pulp, and today you've seen this this first move. How much higher do you think this stock can go, at least in the near term?
See, the 200-day moving average is at 135.
Yeah.
So basically, any sort of small pullback can also go to 110, 115. But the issue is different in all of these mid caps. They went up because of cost of capital in the last couple of years. That is getting withdrawn. So mid caps are looking for a bear market. So don't get overexcited thinking this is 2017 or something. The rallies here will be mild and the sell-offs will be, much more because people want to get off.
Okay. All right. Just coming back to you, Mitesh is also with us, and Sandeep. Good morning again, Mitesh. What are the fresh trades at 10?
Yeah. So I have one buy and one sell on the stock side. Dr. Reddy's, and I think the pharma pack is clearly still showing strength. That's a buy with a stop at 26.15 for targets of 27.20. It's moved up slightly, so around 26.50, 26.45 in cash could be a good entry level. And Eicher Motors is a sell. Keep a stop at 26.550. Look for targets close to about 25,200.
Okay. Sandeep is here with us. Good morning. What are you trading, Sandeep?
Good morning, Lata. I would go with a sell in a ITC, stop loss of 299, target of 290, and a buy in a Hindalco, stop loss 243, target 258.
Okay. Ashwini, there is deep pain in Motherson Sumi. Is there further room to sell now? I mean, it's down 5%.
See, Motherson again is one of those stocks which did very well. It's now correcting. Everything is correcting on a larger time frame. So maybe 200, 220 is possible. Yes, it's a great company, etc., etc. But right now, it's in a bear market. So I don't know. You want to do an SIP? That seems to be one of the viable solutions. But right now, I don't think market is really looking at all exporters. Okay. Maybe IT Pharma is doing well, but certainly the market is not supporting Motherson Sumi right now.
Yeah, it's a victim of trade wars, isn't it? Thank you very much, Ashwini, Mitesh and Sandeep for joining us. And we will keep coming back to you for more trades. At the moment, the Sensex has just dipped a smidge into the red.
Yeah,
I mean, flat is more the right word. The Nifty is just holding up 15 points. And there's a little bit of receding of the gains in the mid-cap and the Nifty bank as well.
But there's very violent moves happening in a lot of these NBFCs. Indiabulls Housing, for example, I think it's really all over the place now. Now it's up 6.5%. Just pull out that the chart again. Really all over the place. You know, it started with the gap, went into the red. Now up almost about 7%, so that's the one. But the stock of the day today, I think, is turning out to be Bharat Electronics, BEL, the one that we were just discussing in our top 10 as well, and with Ashwini also in the trades. That's the one which is seeing the most powerful short covering bounce, at least at this point in time, up about 8%, considering the kind of fall.
The market is absorbing the fact that CRISIL has reiterated yesterday at AAA for Indiabulls. So maybe, we flashed the news about an hour ago. Maybe it's just getting digested. Let's see, whether this is also just a bit of short covering, whether it gets sold into. We have to wait for all that. But the other big pain point for the market is how will IL&FS get resolved? 93,000 crore exposure. It is planning a rights issue of 4,500 crore, and the board meeting is on September 29th. Sources tell us that IL&FS management sources tell us most shareholders are interested in investing. We heard that from the LIC chairman himself. However, HDFC, which holds about 9% in IL&FS, is not keen. I had a chat with Mr. Kiki Mistry. Listen to a slice of that conversation.
I think it's exaggerated. The whole worry in the market has been hugely over exaggerated, caused by rumors and probably caused by some short selling somewhere or whatever happened in the market. I don't think there is that much fear. I think there is enough liquidity in the market. Yes, there is not abundant liquidity, but there is enough liquidity to make things going.
IL&FS, we have the LIC chairman saying that they will do all that they can. They will try to do all that they can to prevent a collapse. You're a shareholder too. You will subscribe to the rights issue?
See, Lata, we are a very passive shareholder. We don't have a representation on the board. There is no one from HDFC sitting on the board of IL&FS as we speak today. So we are a passive shareholder. My inclination would be no, but it's something we'll have to take to our board and take a call on what to do.
Okay. That will be done after the board?
After we get to know more details about what exactly they're planning and what their outlook is and what their plans are and stuff.
And the RBI meeting on...
RBI meeting was there on Friday, but the RBI meeting is, I think, more for the RBI to understand what each shareholder feels more than anything else.
Okay. So
but there are active shareholders in IL&FS and there are not active shareholders like us in IL&FS.
Okay. But do you have some idea of their assets? Do you think if a line of credit is given... Okay.
I do believe so. If you ask me personally, and I'm not fully conversant with the balance sheet, but their assets are not bad. Their long-term assets are of good quality. It's just that realizing a road project or realizing a water project or something which is, it's really very long-term, and you can't sell it in a hurry. So you have to have a little bit of asset liability management where you fund these kind of assets more out of long-term liabilities rather than short-term liabilities.
There were actual fund managers who said that they probably didn't have IL&FS paper, so they were free to speak. They said if they had that paper, you know, suddenly you have advertised yourself as a AAA paper, as a fund holding, you know, high-grade paper, and suddenly one of them is B, and then D, it would be a reputation risk for them. So they were genuinely worried.
No, I'm sure it would be a reputational risk for some time, but it would be equally a reputational risk for the rating agencies which had them at AAA and then brought them down to D category. But you know, having said that, fund managers might have been worried, but there was no real systemic problem in the market, in the sense there wasn't any rush of people redeeming the money or you know, massive redemptions happening from mutual funds which would have created panic in the market. That did not happen. So people took it in their stride. Yes, you do hundreds of paper, and maybe one paper does sometimes go bad, and you have to write down that paper and the matter is over.
Okay. Well, the fact of the matter was that yields did firm up, and at least one paper was reported to have, you know, just in 24 hours it went up by about 75 or 100 basis points. So is that freeze over, you think? That was
I think that was again a knee-jerk panic reaction, because one particular fund house had marked down their investment from whatever I read in the papers, and therefore were worried that they would have redemption, and because they thought they would have redemption, they were trying to sell a lot of other paper to, you know, to have enough of liquid cash. So I think that was a little overdone in the market. It happened with one particular instance, and the market read it as being something which was systemic and which was much more serious. And I think this particular company, they came out to the market and they talked about what their asset liability position was.
Yes. Now, even after that,
I think also, if I may say, the regulators are pretty much on board. I think they are also concerned with what is going on in the market, and they are continuously making statements that they will take whatever proactive steps are required to be done.
That statement helped, you thought?
I think that statement would have helped, and I think from what little we can see in interacting with regulators, that they are concerned and they are willing to step in if the need arises.
Okay. Now, we did hear of a lot of deals happening this week. Even companies that were, you know, sold off last week in the equity market, like DHFL and India Bulls, have managed to raise money this week, as have many other companies. Even Group Finance has reported 1,000 crores. India Bulls said 2,200 crores over 3 days. DHFL reported. Now, although they have raised, some of them have raised money at about 15-20 basis points higher than the going rate last week. Do you think that there is a further climb in yields coming?
I don't think there is a further climb in yields coming specifically for these companies, but overall, if you ask me my outlook on interest rates, clearly the outlook is that rates are moving upwards. With the rupee being where it is, I think RBI will, in my view, have to step in and push rates a little higher. I would expect at least a quarter, I would say a 0.25% increase in interest rates when the credit policy comes up, and that will have its ripple effect in the economy, ripple effect in lending rates. But having said that, I think the market has pretty much discounted that.
Okay. Well, yesterday when I went to meet Mr. Mistry, we thought that the Group Finance deal had been done about 20 basis points higher than last week. But what we now realize is that it was done on several, you know, levels, 8.5, 8.6, 8.8. So actually, it's almost 1 percentage point higher than last week. So yields are tighter by at least 100 basis points, something I was not aware when we started that interview with Mr. Mistry. We'll, of course, play more clips of that. But now I'm joined by Rima Tendulkar.
Hi, Lata, and it's getting a bit choppy for our markets, at least in the last 30 minutes. But what's moving higher are many of these NBFCs. So pull up an Equitas, that's up close to about 5%. A Canfin Homes, too, has now nudged back into the green line. So a spike coming through on Canfin Homes as well. And bear in mind the Asian market context. So Hang Seng has extended its gains and now is higher by close to about 450 points compared to, 300 points when our markets opened up for trade. But it's time now to get you a complete roundup of what's happening in the commodity universe. Let's get in the early rates with Manisha Gupta.
Well, thank you so much for that, Reema. We have started the day slightly weaker on many of those commodities, beginning with the crude oil prices, where after US's president's statement saying that before the US-Iran sanctions deadline hits, they will ensure that there is enough supplies for crude in the global markets. That actually led to some profit taking, and also the fact that we had seen a huge gain up in the crude oil prices has led to some correction as well. But the fundamentals are still positive. If in the month of April, Iran was exporting 2.8 million barrels per day of crude, in the month of September, that's expected to have come down to 2 million barrels. So 0.8 million barrel already is off the market from Iran. And that number actually could be coming down as many more countries continue to cut imports or close down imports completely from Iran in the next 1 month. So that is something, a number that the markets would very keenly keep an eye on. It also has to do with the US Fed meeting today. Ahead of that, you have seen strength in US dollar, and that seems to be weighing onto the dollar-denominated commodities. On gold and silver prices, for sure, where you have seen decline in the international markets in the last 24 hours, and the Indian markets, of course, are mirroring and pricing that in as well. Well, the US Fed meeting, the strength in US dollar is weighing on the metal space as well, where you have seen a third straight day of decline come in. The copper prices are 0.5% down on LME and Shanghai, trading quite flat in the Indian markets here as well. And everything else in the metals have seen a decline. It also has to do with the US and China trade war escalation. That seems to be weighing onto this space. A bit of pockets where you have seen buying come in is really because of the day-to-day LME inventory data has shown some decline in a couple of those metals, and that is what they're reacting to at this point in time. But the bigger picture will be the currency play, the Fed meeting minutes, and of course on what US and China continue to say on those trade concerns there. Trading strategies, and we have them from Angel today. It's a couple of buy calls coming in from them. For gold prices, they're looking at an upside of 31,000. And the other strategy really is in case of the crude oil prices, where it's a buy yet again with 5340 as a near-term target.